Any successful trader can tell you that the first rule of trading is don't lose money. If you can learn to live by this simple rule, then the rest will be easy. Hi, my name is Reese Shapiro, and I'm your binary options trading coach. I spent over 10 years managing an options portfolio for a major Wall Street bank. The options that are traded on Wall Street are very complex. Each option has many different possible outcomes, and it's difficult to know your risk and reward before you trade. Banks use proprietary formulas developed by mathematicians, who usually have PhDs, to calculate and manage their risk. When I traded these options, I had a team of people to help me with risk management on a daily basis because these options have so much complexity and uncertainty. But trust me, I know, I traded these complicated securities for many years. More complexity does not mean more profitability. One of the features that I like most about binary options is that they're simple. If you can remember from our Introduction to Binary Options video, there are only two possible outcomes. Either you get your full payout or you lose your full investment. That's it. So the risk and reward are known ahead of time. Before you place any trade, you know your risk, that you lose your full investment, and you know your reward, the payout. So risk management is simplified dramatically relative to the complicated options I traded in my previous life. But even in the simplified world of binary options, you'll need to learn the basic principles of risk management in order to keep more money in your pocket, grow your trading account consistently, minimize losses, and maximize your profits. So, when we talk about growing your account, you want to strive for safe, consistent growth. This chart here on the left shows an account growing and trending upwards consistently. Not only do you notice the upward trend, but you also notice these little wiggles up and down. Sometimes you get a big wiggle, but for the most part the wiggles are pretty little. And the wiggles are called volatility. And that means how much does it move around on its way to this general trend line. And an account that wiggles a little on its way upward is preferred over one that wiggles a lot. So here's an account that wiggles a lot. And this is an example of very risky trading. So you can see the account wiggling around a lot, which means that there's lots of opportunities for profit, but also lots of opportunities for loss. And you can see that in a lot of scenarios, the account value actually dipped down below its initial level. You also notice that this account has trended down slowly. It's possible to do risky trading and have your account trend upwards, but a lot of times I find people who take a lot of risk wind up with a downward trending strategy. So what you want to strive for is this safe, consistent growth that you see in the left-hand chart. And in this video, I'm going to show you how to do that. So if you missed our first video, Introduction to Binary Options, please go back and watch it. You might feel like the topic sounds too basic for you, but I bet there'll be something in there that you learned that you didn't already know. And if this is your first time watching the video, I usually suggest that my students watch each video more than once. The first time through, you might miss something that you'll catch on the second or even the third time. So watch the video, take some time to absorb the material, and then watch it again. Now, if you don't have a pen and paper handy, go grab one right now. Put me on pause and go grab one. It's good to have a pen and paper so that you can write down a lot of the key concepts and maybe some of the questions that you have about the material. I find that when I can go back and revisit my notes, I can learn a lot more of the material. And finally, I want you to take time and be patient with yourself. Everyone learns at their own pace, and it's better to take your own time to learn to trade well rather than rushing ahead without all the skills and knowledge that you'll need to succeed. So risk management is one of the earliest topics in our series. It's the second topic. Some other trading courses put risk management as an advanced topic or something that they stick in at the end. But I think risk management is one of the most important things a trader needs to know. Risk management impacts just about every decision you make as a trader, From how much money to fund your account with, to how you'll divide that capital across your trades, to which trades you're going to invest in. Risk management helps you set a framework for making your trading decisions. When we move on to a more detailed discussion of single trade strategies, it's always going to be in the context of these big decisions that you made early on as it relates to risk management. So I can't overemphasize the importance of risk management in your trading. Now, as I said before, Wall Street banks have teams of people whose sole job it is to manage the risks of trading desks. These teams of people have to understand all the complexities of the option strategies traded by the bank and how those risks change as the market moves. Binary options are much simpler because they only have two possible outcomes. And you know those two outcomes ahead of time before you trade. The risk and reward don't change after you place the trade. So because of the simplicity, you'll be able to manage risk yourself if you follow what I'm about to tell you in this video. Many traders consider options trading to be a high-risk, high-reward strategy because in each trade, it's possible to make profits that are multiples of the original investment. It's also possible to lose the entire investment. For that reason, risk management is critical to a successful trading strategy. There are several key elements to a successful risk management strategy. These elements are allocating your capital to binary options. So that means how many total dollars or total capital are you putting into your account. Diversification across trades. So this is going to tell you how many trades are you going to do, how much of your capital are you going to put into each trade, and what types of trades are you going to place. And finally, trade selection. You want to make sure that you're selecting trades that have a good probability of success. When we think about these elements, you can easily see that a lot of them are about managing money and capital flowing through your account. So for that reason, some parts of risk management are sometimes called money management. So what does it mean to allocate capital? Well, allocating capital just means deciding how much money you want to dedicate to binary options trading. Right away, you can see the importance of the risk management process because this is one of the first decisions you'll have to make as a binary options trader. When you go to open your trading account, you'll need to decide how much money to put into the account to start. Now, in our last video, Introduction to Binary Options, we talked about selecting a broker. If you missed that segment, please go back and watch it again. When you're choosing a broker, you want to think about the bonus that the broker offers. Most brokers out there will offer you a bonus, and even though many traders can be scared of bonuses, a bonus can really help you if you follow the right steps. So a bonus is a little kicker to help you get started. For example, if your broker offers a 50% bonus and you put up $1,000, then your broker is going to give you 50% or $500 as a bonus. So your total capital in your account to start is going to be $1,500. And this additional $500 can really help you a lot in terms of learning to trade. You can have up to $500 in paper losses before you lose a penny of your own capital. So going back to that first rule, don't lose money, this bonus can really help because it puts you ahead of the game. Now, usually the amount of the bonus will depend a lot on the amount of the deposit. For example, with my broker, Go Options, when you set up your account, you're going to have different choices, and the different choices will really be driven by the amount of money that you plan to deposit into the account. And most of the brokers that we recommend are set up this way. So the bigger the deposit, the higher the bonus in percentage and in dollars, and the more features you'll get with your account. So going through the various account types for Go Options, if you deposit between $200 and $499, you're opening a micro account, and your initial deposit is going to get a 25% bonus. If you make more deposits in the future, you're going to get a 10% bonus on each of those deposits. If you open a mini account between $500 and $999, your bonus goes up a little. You'll get a 35% bonus on that initial deposit and a 20% bonus on any additional deposits in the future, with a couple of features to go along with that. Now, we usually recommend that people deposit at least $1,000 and try to get into this standard account between $1,000 and $4,999. With most brokers, a deposit in this range will earn you a 50% bonus, and with Go options for a standard account, you'll get a 35% bonus on any future deposits. And you'll also get a few features. Now, if you can deposit more money, you can get into a gold account or even a platinum account between $5,000 and $9,999. Your bonus will go up to 75% with a 50% bonus on additional deposits in the future. And you'll get all these additional features like a personal account manager and strategy training if you can afford to get into this category. And the VIP Platinum category, if you have more than $10,000, you'll get a 100% bonus on your initial deposit and on any future deposits. But most of us don't have $10,000 lying around to dedicate to this. If you do, great, but I think you can really be successful with a binary options standard trading account, or whatever the account type your broker calls it. Most of them for this range, $1,000 to about $5,000, you should get about a 50% bonus on your deposit. You want to make sure that you can start with at least $1,000, and here's why. On the left, I have a chart of an account that was funded with $1,000. And you can see that over time, the account grew at a good rate. And this is because the trader had enough capital that they could make big enough trades to really make a difference in the value of their account. Now, you want to strike a balance, and when we talk about diversification in a few minutes, you'll see why. But you're going to be dividing your initial investment across all of your trades. So if you don't have a lot of money to begin with, then you'll be making tiny, tiny trades. So the account on the right was one that was only funded with $100. And you can see that it grew over time, but the rate of growth was really, really slow. And why? Because the trader had to place tiny, tiny, tiny trades in order to be able to divide up that initial investment. And so the trader was spending a lot of time trading, and it wasn't really a good use of his time. With $100, it's going to take a long time to really make money. So you want to put up at least $1,000 to be able to do appropriate money management. Binary options requires real capital to succeed, so you want to keep that in mind. Once you have your account open and funded with your capital that you allocated, you'll need to think about developing your trading strategy. A good trading strategy tells you how to allocate your capital across your different trades, because there are many good trades out there, and you want to be able to take advantage of trading opportunities now, while saving some capital in reserve for good trading opportunities that may come your way later. So even with very short-term trading strategies, you want to remember the proverb, don't put all your eggs in one basket. Don't put all your money on one trade, because even if the trade looks great, there's always a chance that you'll lose money. Going back to our rule, don't lose money, we're adding to it. Don't lose a lot of money. What you need to do is to spread out your risk through diversification. And this means that you're going to do several or many trades rather than just one or a few large trades. What you need to do is spread out your risk through diversification. This means you'll do several or many trades that are smaller in size rather than just one or a couple of really large trades. And the exact number of trades that you're going to do is going to depend on a number of factors, including your total capital, your risk tolerance, and the amount of time that you're willing and able to dedicate to binary options trading each day. If you have too many trades, you'll have a lot of diversity, but you may struggle to manage trading them each day. You may even find that you don't have time to think each trade through, and your win-loss percentage will suffer. On the other hand, if you do one or two trades and you happen to be wrong on one of them, your account can really suffer. Somewhere in the middle, around 10 to 20 trades, is probably a good number to start with. This way, each trade is only about 5 to 10% of your account. So each slice of the pie here represents one trade of about 5 to 10% of your account. And that's big enough that if you're right and you wind up getting the payout, you're going to grow your account at a good pace, whereas if you're wrong, you won't lose a huge percentage of your account. If we think about this in terms of the trading day, you'll do about 10 or 20 trades total across that trading day. Assuming a 10-hour trading day, that's about 1 to 2 per hour. So you can place a trade or two and then walk away for about 30 minutes to an hour, go do something else, come back, check your trading screen, place more trades. Or you can put 10 to 20 trades on in the morning, and then the rest of the day is yours. Any way you think about it, you should be able to trade successfully without spending your whole day in front of the screens. Now, there's no magic number that works for everyone, but if you're new to trading, I suggest you start with a target of about 10 to 20 trades, each one of about 5 to 10% of your capital. Now, in your learning period, you might want to start with a smaller percentage of your capital. So let's say you deposited $1,000 at your broker and you got a $500 bonus. So now you're sitting with an account at $1,500. This is not the time to be greedy. You may think of the $500 as free money and be tempted to bet it all on one trade. But wipe that thought out of your head. The $500 is like training wheels. Pretend that the $500 is your entire capital. Think of it like a sandbox account, where you're practicing trading so that you can learn to get good at it. So you pretend that that $500 is your entire capital. Divide that into 10 or 20 trades, each for $25 or $50, for a total of $500. And place those 10 to 20 trades. Once you've done those 10 to 20 trades, you're going to analyze the results. So you started with $500, you placed 10 trades, each was $25 to $50. You're going to look at the percentage of winning trades and losing trades and your total account value. Now, your account value is not going to be below $1,000 because you only invested the $500 bonus. So your account's going to be somewhere between $1,000, maybe $2,000 or more. See where you are on this spectrum. If you're between $1,000 and $1,500, that means that you probably lost on more of your trades than you were successful on. That's okay. This is a learning process. If you're somewhere in here between $1,500 to $2,000 or even more, then good for you. Your trading strategy has a better winning percentage. But either way, regardless of where you are on this spectrum after your initial $500, you haven't lost a dime of your own capital, and you got a free lesson in binary options trading. See? So you understood your risk, your potential reward, and you didn't lose money. You're becoming a pro at this. So once you're sitting on a funded account and you know how much you want to put into each trade, the next decision is going to be what to trade. Diversification also applies to the trades you select. You're going to want to diversify across asset class, country, and assets within the asset class. Even if your trading strategy focuses on one asset class, you can still diversify. For example, if your strategy focuses on binary options on commodities, some of your trades will be on oil, some of it will be on gold, etc. Trading different commodities means that if there's news out on one commodity that's going to adversely affect your trade, it'll only impact the trades on that particular commodity, and it's not going to impact all of your positions. You can also diversify by entering positions at different times during the day and selecting options that expire at different times during the day. This way, if there's global news at any one time during the day, you won't have too many positions expiring at once. So now that you know how to diversify your account, the next step in risk management is the risk of the trades that you select. You know that the risk is that you'll lose your full investment and the reward is the payout. But to trade, you want to choose trades where there's a high probability of getting the reward and a low probability of losing money. This is the art, not the science part of the risk management. So you may be tempted to go for trades that have a really high payout. But keep in mind that your trading strategy and the success of your trading strategy is really going to depend a lot on that probability of being successful on each trade. What you want to do is focus on the methods that you'll learn from this video series to give you intuition about which trades are high probability. And we're going to talk about that later in this course. So risk management is one of the most important elements of a successful trading strategy. If you get this part right, you'll avoid unnecessary losses and trade smarter. If you have any questions, you can send them to us at any time. We'll be glad to help you fine-tune your trading abilities. Before we end this video, I'm going to go over some of the questions that I get from a lot of my students in my courses so that you can all benefit from the answers. Many students tell me that the risk management strategy I talk about in my classes sounds quite rigid, and they ask me if I follow it exactly in my own trading. Now, I've been trading for a long time, so I don't always follow the risk management protocol exactly. For example, some days I'm really busy and I know I won't have time to do 10 or 20 trades. So I might do 5 really great ones with a little more capital than usual, although probably not double the usual capital. But that way I'll be able to free up my day for other things. Or if I have a day where I have a lot of free time, I'll try to do 20 or more small trades, and even some of them will be experiments. I'll experiment with a new asset class or a new strategy that I haven't traded a lot in the past. I like to have a little wiggle room in my strategy. But in this course, my goal is to show you the general guidelines so that I can leave it up to you to make your own decisions each day. The basic idea is to introduce you to the concept of don't lose money and show you basically how I do it. I also get a lot of questions about determining the probabilities of a winning versus a losing trade. It's impossible to determine exact probabilities, and in the next few videos, when we talk about specific trading strategies, the idea is going to be to trade strategies that are quote-unquote advantaged. And this means that they'll have a higher probability of winning than losing. But we usually don't try to quantify the exact probability. That takes too long and it's really, really complicated. Instead, what we do is we look at our trading strategy over time. If we're making money, we know we're doing great. And if we're not, we might need to reassess the probabilities and try to aim for more high probability trades. So that's it for this risk management session. If this is your first time through on this video, I suggest you watch it at least one more time to make sure you have a handle on everything we talked about today. If you missed our introductory video, I suggest you go back and watch that video at least once. In our next video, we'll move on to some example trades, and I'll show you how to use my broker's site to look for, place, and manage trades throughout the day. For now, I'm Reese Shapiro, your binary options trading coach. See you next time.